What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 14th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we're going to be spending some time to go through cryptocurrency markets, taking a look at some of the broader indexed ratios that we've created here on the channel to see how oracles are doing, decentralized exchanges, and all the components of DeFi and enterprise blockchain, as well as talking about some fundamental developments and also having a sponsored interview with Jackson from Caleb and Brown, one of our favorite OTC desks in the cryptocurrency space, to get some institutional insight as well as some technical insight into DeFi. So we've got a lot of things to discuss. Let's just go ahead and dive straight into it, everyone. Taking a look here over the last 24 hours, we can see here that the vast majority of cryptocurrencies are in green territory right now, with very few exceptions down in the red and just slightly down. Really, we're seeing a lot of plays here doing well, having a healthy green day to the upside, and a lot of major enterprise protocols or DeFi protocols doing well. Algorand up 35%, Reserve Rights up 26.8%, and Waves, one of our recommendations recently in our Dash Report alerts group, up around 25.8%. We didn't catch the absolute bottom of this 24-hour move, but we're up a good, I think about 15% from where we first initially got into the position. So it's really good to see here. Broader market right now is still picking up pace. Wanted to just kind of start off the conversation here, guys, to kind of put some perspective on, where people's focus is right now. So over the last few months, right, TradingView collects data. They always are constantly collecting data on what traders are focusing on, trying to provide the best market pairs and data pieces that people want to see. And Tesla has obviously been one of the hot button stocks that everyone's been watching. Many people are fans of Tesla as a company. And again, whether or not you're a fan of them or not, their stock has obviously performed phenomenally. They are now worth, I think, more than the vast majority, if not all, of the major U.S. automotive companies. And again, it's starting to rival on valuations against companies like Toyota and things of the sort that produce much more vehicles, right? But anyways, putting that aside, we've realized that fundamentals don't matter right now. It's a matter of what people are buying, what inflows of capital are going towards. And we can see that Tesla's obviously been one of those companies as we've been seeing a new peak of retail traders. But the second most interesting asset to traders, or at least the most viewed, was Bitcoin. Now, of course, the performance is quite different from Tesla. It's definitely a different kind of asset class. And again, you're looking at an individual stock. If you compare Bitcoin's performance since back in March to equities, you'd be pleasantly surprised to find that Bitcoin is far outweighing any asset out there, gold, silver, or equities. So again, Bitcoin is doing great here compared to any broad measurement of assets. But this goes to show here, I just want to kind of pivot this into our topic here about why I really do believe that we're still set on to go to 13K in the short term. And along with that as well, how we're on our way to breaking 20,000 and continuing through the cycle. So again, turning off the SMS indicator here, no need to do anything complex here. We did exactly what we needed to do after having the rally for the past, really the 2 weeks here and the tail end of July going into August. We've done exactly what we needed to do for the beginning of this month. Taking a look at the weekly, we're resting up here on the line of both previous resistance and support. And we're continuing to take on it, this kind of vertical move here on the logarithmic chart. Let's take it here to the daily just to kind of showcase that trend here. Shows very clearly that we've come down here after the pullback that we had, that mass day where again whales were trading against one another, trying to cause a mass liquidation event. Prices quickly recovered and we've been holding up on this line of support. Again, we've been talking about this since back here in February when we first hit this resistance point, that this would be a very important line to watch. A lot of people like myself are naked traders. But the problem that many of them, kind of fall into is that they usually only look at, for example, horizontal lines of support and resistance. And those are extremely important, right? But at the same time, we want to look for these types of dynamics where resistance and support are taking on certain angles in price. So again, I think that we're very much on our way to testing up back to these previous highs, making a pullback. Again, don't follow this line exactly, guys. It's just an example of what we're looking for here, possibly over the next couple of months here. But again, we're on our way here to breaking past those highs. And again, as we've seen Bitcoin been doing well, it's not that I'm per se bearish on Bitcoin or anything. I think it's going up to 20K and beyond. Obviously, I'm bullish, but at the same time, I'm trying to position myself as a macro trader in the assets that are performing best. And guys, altcoins have been continuing to kill it. It's continuing to be one of the best calls we've made in years here on the channel, which is when we went long on altcoins back here in September 2019. and we're close to approaching 40%. Now, the thing that we also mentioned as well that's very important to understand is that this is not going to go straight vertical here. I mean, the returns have been phenomenal in the market. If you've been trading any of the DeFi or enterprise protocol plays, been doing a lot of value scanning across the market to find these kind of awesome plays. It's not going to be like this because you don't have the same type of market to scale here for altcoins to take market dominance. You were starting off at the threshold of 5% market dominance for altcoins back here, and now this time we're starting at 7 times more, 35%, right? So again, the multiples in this rally are not going to be as crazy. Not as many players are going to win out as last time. But if you do find those right plays, there are going to be phenomenal opportunities in the market. And we've already been seeing that in DeFi and, again, the enterprise plays, oracles, things of that sort. So let's go ahead and take a look at some of those major kind of asset wings here. So the first one I want to take a look at here is the DeFi index, or what I like to call the index. Okay, I'm going to give you guys a moment to just to live with that pun. But anyways, yeah, I'm not the best with puns, but I thought that was a pretty creative one. Just focusing here, taking a look here at price. We actually wrote about this in our newsletter, talking about the tool of indexes here, about watching for this 40% pullback point, and we basically got the index coming into what we call the discount zone. We look for those corrections on the players that are winning in the market. This is an aggregate ratioed index of Ren, Kyber Network, and Bancor, 3 major DeFi decentralized exchange tokens. And so far, they're doing pretty well. In fact, they're riding back up right now at the current price around their all-time highs. Taking a look at the daily, it becomes even more clear here that we've had a nice multi-week recovery since back here in late July, and now we're looking like we might want to press up to new highs here. And this is similar to what we've seen in history. We have these great rallies, and we have pullbacks of around 42%. Sorry, I meant to drag that out there. But again, you can see here 42%, 40%, similar ballpark range here. So we're going to be looking for this now to possibly pop up. We were kind of hoping for to set in a lower high here and have a longer term correction and get another opportunity for kind of consolidation down here to this discount zone. We aren't getting it, and I think this proves to the point here that things are just going to keep accelerating in this market, everyone. So again, I don't know when it's going to pop here, but it looks like in the next week or so we could really start to move higher with some of these with these decentralized exchanges, especially as some of the liquidity is probably going to be circulating out of the Oracle plays, such as Chainlink, Band Protocol, and RLC. I like the Oracle plays, guys, but they have been the best performers in the market right now, and it looks like they're getting a little bit top heavy, going at a vertical ratio. I mean, you can see here we've gone from around 35,000 for the index up to nearly 3 times that if we take the peak up here. So again, this is looking a bit top heavy, not saying that it doesn't have a few more days to go, but for me personally, I'm going to steer clear of adding to any of the Oracle positions that I may own at the moment. Outside of that as well, Waves, this is one that you have to watch, ladies and gentlemen, because we actually mentioned this in the newsletter the other day. This is a good example of looking at ratios or pairs that are non-Bitcoin pairs, and this is Waves to Ethereum. This was something that was recommended from one of our newsletter subscribers, Michael Jordan Watt, and he's not only been a supporter of the newsletter for a while, but he's been an active member in the community discussion, which is a great benefit that comes with the newsletter. We kind of bounce back and forth on ideas, and he brought this up to me, and it was a really awesome chart where I was so proud to see many people in the community starting to look at other pairs or using ratios to kind of spot opportunities in the market. And whereas you look at the normal traditional Bitcoin chart here for Waves, you may not spot this opportunity, but Waves and Ethereum are very important cryptocurrencies to compare because Waves was one of the first major protocols to come out after Ethereum. And of course, we can see here that there is some long-term market pairs. We have one on Binance here that's been around since back in December of 2017. And lo and behold, we've broken past a key level of resistance that has not been broken since all the way back here in September of 2018. So very, very important stuff to focus on, guys. These are the kind of opportunities we want to see the volume coming up here, the massive moves here. And to keep in mind here, a lot of this came through here in the last few days, right? Just over the last 3 days, the vast majority of this price action and volume has come in. Doesn't matter though. I know it seems like it's top heavy here, but look at the longer term time frames. It's the same exact thing you have to look at when you're taking a look at some of the protocols. Yeah, a lot of them have gone up 100% or 200%, but it's because we're stepping into the early stages of this bull market. It's because they had 90% plus corrections. That's when you get optimistic. And you don't worry about paying the slight premium because your hopeful return is somewhere in these higher ballparks, right? So again, I'm not saying it's going to go there overnight, just saying this is the kind of stuff you guys should start doing in your trading strategies. Not saying waves is for you. You have to go out and do your own due diligence and research. It's just one of the successful trades that we're still in currently right now, and we're letting it ride. Now, I wanted to go ahead and talk a little bit about some fundamental developments here. Again, just trying to get a perspective as to what's going on right now in the world in regards to news for crypto. So some good news here. 4 of the top 5 major South Korean banks are going to be offering cryptocurrency services here. 2 more have joined the ranks here looking at custody options. This is coming after Germany has made it very clear that German banks can start to custody cryptocurrency assets. The same going in the United States, with some of the major regulators determining that it's completely fine for banks to basically integrate custodial solutions, start providing these services. It's really awesome to see that these developments are coming in. Now, again, there's the argument here of too little too late. And I really don't think so. I mean, I think banks have an opportunity here if they're willing to take the kind of step forward in providing these services, and they're probably going to retain some customers for this. And I would say hats off to them if they do that. But at the same time, you all know that I'm not a big fan of banks. I want to see an entirely new wave of tools come to the forefront that allow you to become your own bank. And that's what we've built, obviously, personally through Digifox. But again, all in all, want to see more support and competition here. Along with this as well, we have a company, MicroStrategy. This news came out the other day, and I never really got time to talk about it, but a major publicly traded company known as MicroStrategy, which mainly focuses in like mobile applications and developing different types of software, has moved their $250 million of cash into Bitcoin. So we're not just seeing major fund managers or, for example, people who are creating financial exchange-traded products, ETNs, exchange-traded notes, whatever it may be. We're not just seeing them put aside cash into cryptocurrencies and buying up crypto assets. We're seeing actual companies that don't even deal in financial markets. And get this, listen to the quotes here that they're coming up here. So this is a publicly traded company that moved its cash reserves into crypto. MicroStrategy has recognized Bitcoin as a legitimate investment asset that can be superior to cash, and accordingly has made Bitcoin the principal holding in its treasury reserve strategy. Love this other quote. We find the global acceptance, brand recognition, ecosystem vitality, network dominance, architectural resilience, technical utility, and a community ethos of Bitcoin to be persuasive evidence of its superiority as an asset class for those seeking a long-term store of value. Brilliantly said. Right? Again, Bitcoin's far from a perfect asset, just like any other crypto asset. But the key principles that it has maintained since its inception are why people are starting to turn to it. And I think it's really phenomenal to see a non-financial company doing this. I'm interested to see if we're going to see more companies, maybe even with bigger balance sheets, do something similar. But again, very, very fascinating stuff. Now, I want to talk about Grayscale as well. Grayscale has been one of those companies we just discussed about a moment ago, continuing to build up their balance sheet here. And right now, they currently own an asset under management of $4.7 billion here for the GBTC ETN. This is absolutely incredible. This is just the holdings here for Bitcoin, bear in mind. Right? They have other types of financial products that are seeing a record pace of demand here. So we can go to all products here. You can see they have all types of different crypto products here that people are getting very interested in. So you can see, again, Bitcoin sitting at that $4.4 billion value, but also the Ethereum Trust nearing $1 billion, Ethereum Class nearing 100 million, and a lot of other digital asset funds starting to be built up here. Again, you see the premiums trading on this, guys. It showcases, and it's showcasing to the SEC and a lot of other major financial regulators that it's time to get ready to start preparing for an ETF in this space. It's going to probably be a year and a half, 2 years out from now. It doesn't matter. The slow stages are building up here. When we get above 20K, that's the catalyst moment where institutional demand is going to be too big to let this rest. It's going to be a question of who gets to pick or make that ETF, who gets picked by the SEC as the first candidate to get that front runner advantage. All right, everyone, that's it in regards to the core video here, but I want to go ahead and dive into this really interesting conversation that I had with Jackson discussing DeFi and more. So without further ado, let's go ahead and jump straight into it. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with Jackson Zhang, one of my good friends out at Caleb and Brown, based out of Australia. They're not only well known in the OTC space for large volume trades for retail and institutional traders, but outside of that as well, Jackson's been a long-term friend of mine in the space, and we have these conversations from time to time. And I think today, especially, it's going to be a really exciting time to have this conversation because of all that's going on. So, Jackson, I know you're in the thick of it and stuff, whether it's at Caleb and Brown and other things that you're doing in the space, man. It's great to have you here, and I can't wait to chat.
Yeah, thanks for having me on the show again, Nick. It's always my pleasure to have a chat with you on your channel.
Absolutely, man. We do these from time to time every month or two. And I'm really excited just to, hear what's going on your end and stuff, what you're seeing in the space. I mean, we've got lots of developments going on. There's obviously the kind of excitement around Ethereum, obviously the protocol update, Ethereum 2.0, starting to finalize its testing phases and now starting to move on to phase 0, possibly on mainnet in the coming weeks or months. And outside of that as well, I mean, DeFi, enterprise blockchain, what are you picking up on your side? I know you kind of get a good institutional lens in a sense for, what the volume is looking like, the kind of emotions of the market right now. What's your take on it?
Yeah, so obviously things are heating up a lot. I think anyone can clearly identify that DeFi is leading a lot of that way, and it's kind of pulling the market along with it. So if we want to take a look at, kind of the general narratives that the space has played out over the past, it started off with Bitcoin. Then we started talking about protocols and smart contracts when Ethereum was created. Then we had the ICO boom that was kind of like relatively within the same time frame. And then we had the bear market, right? And in the bear market, we realized that the only coins that are going to perform are the businesses with actual revenue coming in that are generating real network value. So in that sense, we saw that a lot of these exchange tokens were outperforming the rest of the market during that 2018 bear market. Now what we're seeing is a big ramp up in DeFi because people are realizing that we have a platform now where everyone can be on the lending and the borrowing side. That was the initial story of DeFi, and people were able to generate interest on their assets without being a bank. And then something clicked over where projects realized that they can actually amp up that annualized yield by providing as a reward their own network token. And in that sense, these projects are distributing the tokens over the community, so it's not as centralized and held by large whales that can have a negative impact. And then what's amplifying it dramatically is that as these tokens get distributed and people gather interest in them, the price starts rising, and therefore the annualized yield just starts ballooning out of control. And this has made the kind of the APY go from like the usual 5 to 10% that we're used to in the crypto lending space to like 50, 100, 1,000%, just ridiculous figures. Obviously, these can't last forever, but it's generated a really strong demand in the DeFi market. Now, obviously the concern here is that everything can get overheated, and the DeFi projects that are going to win out are the ones who are going to be able to keep their users after this yield farming is over and retain real users on their business that generate real fees, rather like once these kind of token agnostic yield farmers are gone, because they're really just chasing the highest APY yields.
Yeah, man, I think that's a really good point, Jackson, because I've been following, and one thing I have to say I'm very happy about is in a sense that, I didn't make too many calls back in 2017, but one thing that I was very confident on when we had the first major bull run, I think where a lot of us came into the space, the one thing I was very confident on is I saw all these projects, as you mentioned, kind of the ICO boom, and so many concepts being, kind of tossed at blockchain and smart contracts. When in reality, the only thing that made sense to me was actual financial applications, having kind of permissionless, censorship resistant, and open access to financial services seemed like something that was incredibly exciting to me personally. I followed like Kyber Network back in September of 2017. And then also when Compound came out, I remember following them back in early 2018. And I could kind of start to see the kind of beginning phases of something formulated. And it was nice when we could finally have a name for it. But now, I mean, it has just gone into the mainstream of the broader crypto space. You're starting to see a massive positive shift for Ethereum. A lot of people were skeptical back from 2017. Now they're seeing that Ethereum, finally, I think it took them a while, but I think as a community, they found that finance is the use case here, doing things in an open, kind of access way. And as you mentioned, in these early stages with these kind of speculative tokens that are being launched by a lot of these projects, it's an incentive mechanism to help grow this space. And that's where we hit the kind of vertical hockey stick of growth in the amount of assets that are actually being managed under Compound, under Balancer, under all these different protocols, Uniswap as well. I mean, the immense amount of liquidity that's starting to hit some of these platforms and these smart contracts, it's incredible. One thing that I was thinking about as well that's very important to keep in mind over the next few months is kind of just generally the trend of the broader market right now, because obviously the Ethereum ecosystem has been in the lead here for DeFi. There's no arguments about it. They have the biggest developer ecosystem, the most projects being built in it. Everything right now is happening on Ethereum. But there has been, I think, a genuine concern that some people have brought up, and I'm a big ETH proponent, as with with DeFi and all the expansion that's going on there. But at the same time, a lot of people out there are very, kind of pro looking at other protocols in the space, looking at Tezos, Cardano, Neo, a lot of different blockchain protocols, EOS as well. So I'm curious, like, do you see like there to be a real chance here if gas fees remain as high as they are, as there really isn't much scalability on Ethereum right now? Do you feel that there's a chance for some of these protocols to actually take a sense of market share? Or do you really feel like ETH is going to be able to hold its place even in this kind of tight environment?
Yeah, I really think that the only thing that matters is whether or not you're getting your users to stay on your platform. And right now, there are just so many applications that feed off each other on Ethereum. Then, like, there's Ethereum, and then there's no second place really. At the end of the day, people will put up with a clogged up network and slow transaction fees if they can actually access what they want to access. And right now, we are just not seeing demand on any of the other protocols. Now, I'm happy to be proved wrong, but kind of time and time again, we're seeing that as the market plays out over time, the only projects that stay strong are the ones that have a business case and are continuously generating revenue.
Yeah, Jackson, to build on that, that's something that I try to get across to people. It's not that I can't be for, I can't foresee into the future and stuff and say that, yes, maybe there is going to be protocols that deploy here. They've got some big updates coming, and that, yes, maybe they could tap into some of that market share. But the thing is, you can have the best tech in the world, but if you don't have some form of network effect in this case to be able to actually, bridge people who have been growing in this Ethereum ecosystem, building off one another, as many people talk about, like DeFi Legos, kind of these different DeFi protocols building off of it. I can tell you, like, firsthand and stuff, we built a smart wallet in the Ethereum ecosystem, and quite frankly, I don't think I could just instantly overnight switch over to another protocol, even if the tech was great, because all the apps we tap into, Uniswap, Compound, even centralized providers as well, they're on Ethereum, and Ethereum is the second biggest asset. It's a very difficult transition to make, and to also get, the user base and all the tools just to make that transition. So I think, the protocol that I think has a chance to win out is either one that's going to provide all the developer tools that are needed in order to actually bring and foster a new developer ecosystem. And you can build a lot of copycats of what's already existed out there, as well as new applications, but also one as well that's really going to build the best, like, consumer facing applications. But all in all, Jackson, I think it's a phenomenal time. I am interested in it because we talked about this thing called the protocol wars back a few years ago, which was going to be, blockchain protocols competing for this type of market share. But I'm just curious as well to get some, institutional insight from your side, man. Like, obviously you said you've been working with a few DeFi projects and stuff. Like, what do you think is going to be kind of the big thing that we haven't seen yet, or what's really kind of catching your eye right now?
Yeah, so the last time we spoke, we saw really a dramatic shift in the corporate players saying, okay, now we're interested in crypto. And for the most part of the last 2 years, the funds were kind of taking their foot off the gas a little with their investments. And recently, we're actually seeing very aggressive capital allocation from funds. And they're saying, they're looking for allocations in projects. They're looking for allocations in seed projects. So I think we're going to see another boom of new tokens, new projects. In a way, it'll be similar to 2017, where we're just seeing a lot of opportunities arise. Whether or not they'll succeed is obviously up to the project. But yeah, once again, like, we are just seeing increased excitement that flowed from Bitcoin maybe 3 months ago when we were concerned about the traditional financial system to now DeFi and what are the projects that people are going to be really interested in this age of everything, absolutely everything being done over the internet.
Yeah, man. The one thing that I constantly think is a good comparison is you had the perfect scenario for something like DeFi to take off, where people again are looking for yields in an environment where interest rates are practically non-existent. They're pushing towards negative territory. If you look at the CME, basically the betting markets, along with that as well. If you take a look at treasury yields in the United States, it's looking like we're going to go negative here in the next few months to the next year. Like realistically speaking, like this could become a reality if the Fed gets pushed into this corner. And we've already seen other central banks doing it. I've been hearing as well, I follow Alex Saunders and stuff, one of the other Australian YouTubers. I know he works close with you guys. And the thing is, it's just constantly, I hear this news. We always talk back and forth about like how crazy things really are under the surface and how much it's going to penalize the core saver in this case, who used to expect a yield on their money. And then DeFi comes along, all these new fancy fintech applications come out that really tap into these services. And I think it's just going to be a game changer, whether you're an everyday person or if you're, a fund manager who's managing tons of money and you need to get some kind of yield to combat the massive amount of printing of money. I think we talked last time, everyone was just kind of like sitting back and realizing, okay, what do we do now? There's a lot of new enriched capital in the system. Where do we allocate it now? And crypto just might be that asset class.
Yeah, that's right. I think what we're seeing is kind of generationally, we are seeing a mass disillusion around fiat currencies and around government management of the US dollar, the Australian dollar. We know now that there's going to be a currency war. We know that the central banks are hell-bent on not letting the asset prices drop. They're going to inflate the hell out of the monetary base. And everyone's just losing faith in that. They know volatility is coming, and there's just an increasing percentage of companies deciding that maybe crypto is something we need to consider, or maybe DeFi is something that we need to consider for those higher yields. The example of MicroStrategy, a listed company, putting $250 million of their balance sheet into Bitcoin, I think that's going to make a lot of sense for companies moving forward. If you're a business that imports goods, you already need to be hedging against currency fluctuation, right? Doing it on Bitcoin is just kind of another way to look at it. I don't imagine any company is going to be putting the whole balance sheet into Bitcoin because then they're just trading. But what does make sense is to have a small percentage due to Bitcoin's volatility that will possibly help you out and make up for the currency fluctuations in the central bank currencies that you're usually trading in.
Yeah, man, I think that people are starting to realize this well. I mean, you don't have to be a crazy investing genius and stuff in order to spot this. But if you really take into account market to scale, this is something we talk about a lot on the channel. And Bitcoin still right now, it's about a $200 billion asset in total market cap. I mean, you take gold, for example, we're sitting probably around with the new price spike into an all-time highs around $14 to $15 trillion. I mean, compare the two, which one's more likely to double in the next year, right? And I think people are starting to kind of realize this, especially as we get back to 20K, we're going to have our magical institutional moment where people, much like myself, back when we revisited the highs at 1100 in the last cycle, I was like, okay, this is the make or break moment here. Like if this actually breaks through, like everything, Mount Gox, which was terrible, the Silk Road, all the stereotypes, it's out of the window, right? And this is the time where people get excited. So speaking to that here in this case, Jackson, I'm really curious to hear from you. I know a lot of people are trying to make kind of sizable trades, and along with that as well, there's a lot of market dynamics in this case that can be dealt with when you're dealing with centralized exchanges, even decentralized exchanges. And you guys focus in providing over-the-counter, trading services in this case, and broker-dealer services. So I'm really curious to hear, what is it like here for you guys right now? How does someone get started in looking into OTC trading? Why would it be more optimal for them comparative to maybe more traditional routes like spot market exchanges?
Yeah, so here at Caleb & Brown, what we're really about is making all those services for $100,000 and up transactions available to everyone, starting at a minimum trade size of $2,000. So what you're going to get are all the advantages that OTC desks and their trading partners give, but to the everyday person, right? So you get post-trade settlement on a volatile day. We will allow our customers to purchase the assets they're looking to get into so that they don't actually have to wait for that 3 to 5 day international banking time to clear. We also give every single customer a personal broker that they get to call on the phone. So try get Binance customer support on your phone. That is really once you've tried that, you're never going back, right?
Yeah, once you've experienced it,
everything you need. Yeah. So that's what we're really about. We're just about customer first, customer service first, and making sure everything works out for you. We're also about having one place for you to KYC to give you access to every single cryptocurrency that's liquid on the market. So you don't have to worry about KYCing at 100 different locations and giving your details to all these companies that you don't know. This is extremely useful for anyone who is investing under a tax efficient structure, like a company, a trust, a superannuation fund. It really makes a world of difference. And overall, it's just about making crypto work for investors and making sure that your hand is held every step along the way, from the beginning, the onboarding process, to any technical help you need. We'll help you test your wallets. We'll help you make sure that you understand everything that you need to know. And then on the exit, you'll tell us your strategy, and we'll make sure that you stick to your own strategy. Because if we look at the previous market cycle, even if you wanted to capture the top 5% of the peak price of Bitcoin stayed at $19,000 for like 3 days out of a 4-year market cycle. You got about a 0.2% chance of getting the top, right? So you're never really going to get the exact peak, but what you can do is have an excellent strategy and make sure that you're sticking to it so that you always come out on top. And these are the conversations we're going to be having with our clients at Caleb & Brown. So really, there's no reason not to have an account with us.
Yeah, I think honestly, Jackson, the biggest benefit of like an OTC desk, especially the one that you guys have built, is not only a lot of those like benefits of being able to get onto a trade quickly, not having to wait for that kind of on-ramp delay time that can come with doing bank transfers. But as you mentioned, having the human element to it, getting someone on the phone, being able to get some insight, build some strategies. You just don't kind of get that customer service, but also I think that kind of relationship with a traditional spot exchange like Coinbase, which is going down a lot of the time, which isn't ever getting on the phone with its clients. And again, that's built for some people, but I think for someone who's especially doing larger volumes or kind of wants to take more of a serious approach to their investing, that's where you guys can come in. So I just want to make it clear to everyone, for those of you who might be interested in, getting to meet Jackson, getting to meet all the guys from the team, Prash, as well as Jeff. I mean, they're all phenomenal people. If you guys want to check them out, we have a link down below in the description that'll take you over to Caleb & Brown, where you can get started on some of those services. But, and Jackson, I mean, this has been a thrilling conversation, man. I'm genuinely excited to see, all of the success, but also all the failures that DeFi is going to bring. Like, it's going to be a whole mash of innovation and, crazy ideas coming together. I mean, we've just seen over the last few hours and stuff, there's just crazy stuff popping up on Twitter, and people are all over it and stuff. Gas fees are at new peaks that we haven't seen since 2017 and 2018. So it's an exciting time, man. I'm happy to be here, and I'm happy as well that you guys are active in the space and providing such good services.
Yeah, thanks for that, Nick. I really appreciate it. Thanks for sharing me on the show again.
Absolutely, man.